Well, ladies and gentlemen, the Federal Reserve just slapped us upside the head with a 75 basis point rate hike, and we got to break that down in this video. We're going to talk about the markets, the Fed, Jerome Powell, the press conference, so sit back, relax, let's not waste any time, and let's get right into the video. So check it out. It's currently about 3 p.m. on the East Coast, and once that, report came out at 2:30 p.m., that's when the volatility started kicking in, and we'll talk about that here in a couple of minutes, guys. So let's go over now what is going on. So the Fed hiked rates by 75 basis points, which is the biggest increase since 1994, which is almost 30 years ago, which is crazy. And the benchmark funds rate right now is sitting between 1.5 to 1.75%, the highest since just before the COVID pandemic, which was in March 2020. If you guys don't remember, the rates were right around, 1.75, 2%, right before that. And then they started cutting the rates down to zero. The money printer was going crazy. You guys remember that. That's why the recovery was so freaking fast during that pandemic crash, but we're not going to talk about that in this video. And now let's get deeper into this. The Fed sees the benchmark rate at the end of this year at 3.4%, according to the midpoint of the target range of individual members' expectations. That compares with an upward revision of 1.5% percentage points from the March estimate. So, they see this Fed funds rate going up and away, guys, which I guess, that was kind of priced into the markets, right? We kind of expected that. And the committee then sees the rate rising to 3.8% in 2023, a full percentage point higher than what was expected in March. And the committee projects, the unemployment rate, which is currently at 3.6%, to be about 4 to 4.1% in 2024. So that's what's going down right now, guys. Obviously, we have higher than expected inflation. What's the Fed going to do? They're going to have to raise rates more than what we expected in the previous meeting, in March. And that makes, a lot of sense. Or that wasn't the previous meeting, but back in March, right? So yeah, I'm not surprised at all, to be honest, and the markets really aren't either. You guys can see SPY right around 2 o'clock on the East Coast was at, 379. The report came out, and then we saw the big dump to about 2:30. That's when Powell started speaking, roughly, and then SPY went from, again, 380 roughly to 372. Then it ran all the way to 382, 2.7% move to the upside there, and now it's down to about, 278, right where it was before the report came out. And triple Q, you guys can see, is pretty much as well, same with SPY, right where it was before the report came out at about 282. You guys can see here, 2 p.m. hit, boom. We went down to about 276, ripped all the way to 285, and that's when Powell was talking more about inflation, interest rates. We'll talk about that in a second. He made some comments there, and then we saw the big dump down to about, where we are now, $282, which is right where we were before the, like I said, right before the report came out. So markets are still in a very vulnerable spot, in my opinion. I'm not going long, aggressively right now just because of what we just got, because I still think there is more downside risk in these markets, like I talked about in my recent video. So let's talk a little bit about, let's shift gears now to Jerome Powell, the press conference, the Q&A, all that good stuff. So he was talking about a lot of different things, right? And we're not going to go over everything in this 8 to 10 minute video because the video would obviously be too long if we did go through everything. So he said the American economy is very strong, and I don't agree with everything he's saying here, but you guys got to realize the role Jerome Powell is playing. He can't just come out and be 100% honest. I've talked about this many times on my channel, guys, when it comes to the Fed. They kind of have to sugarcoat things and kind of play both sides and kind of be, beat around the bush a little bit, to not spook anybody, right? What if the Fed said, yep, or Jerome Powell, I've said this before, if he comes out on the podium, he's like, yep, we're screwed, guys. Inflation, we're not going to be able to tame it. And yeah, that's it. What's going to happen? Things are going to collapse. People are going to freak out. So he said the American economy is very strong and well positioned to handle tighter monetary policy. I don't think the American economy is very strong, personally. Call me crazy, but I don't think it is very strong. That's him, again, trying to sugarcoat it a little bit, give us faith, which I understand. That's his role. And he got asked a very good question. Why not go for a full percentage point? I mean, we had awful inflation in May. It's only growing at this point. We're not really seeing it slowing down. He got asked, why not go for a full percentage point? And he said pretty much he's looking for a series of multiple CPI reports showing declining inflation. So he wants to wait and kind of be patient and see, okay, are we going to get this declining inflation? And he also said the next meeting will be about a 50 to 75 basis point hike. So it doesn't seem like he's very, aggressive to the idea of a 1% hike right now or a 100 basis point hike right now, depending on how you guys, like saying it. So he's not looking to do that necessarily quite yet. But, he's thinking about it and he's looking at the data. If you guys watch the Q&A, he's not at this point really driven by models per se. He's looking at the data and he's at a point where he's like, we have to wait and find out, which I'm like, okay, let's see how that ends up going. But he also mentioned how he's looking to kind of front load the rate hikes. So maybe he does, he just did a 75 basis point hike. Maybe we get another one and maybe then a 50 point after that. And then what would be at? Would we be at 3.5% at that point? Maybe that's the path we're going to take. So what he said kind of, alleviated the markets a little bit. It's not like we got anything crazy unexpected. And the question here is, he also got asked, that there, is 3.5 to 4% going to get it done. He also got asked that, and that's where he said, rather, you can't really know for sure. He seemed a bit iffy, to be honest. And he also said he's not model driven, like I mentioned a second ago. And, they're going to find out pretty much, which I don't know. You kind of have to have faith in him at that point, which I don't completely have faith in him. And the $1 million question is, do you trust Jerome Powell? Do you believe that the Fed can actually fight rates? In reality, forget about the sugar-coated, beating around the bush, what he's actually saying. In reality, can the Fed fight interest rate or inflation, right? With the way things are right now, I don't think so. They have to bring that Fed funds rate up a lot. We have strong demand right now, which if that comes down a bit, with a potential recession, I don't know what's going to happen here, guys. There's a lot of moving variables, and at this point, with a 1.75% Fed funds rate, I could tell you for sure that's not fighting 8% inflation. But again, there's a lot of variables, and we have to see how things end up playing out. And he said if he saw another tick up in inflation, this is the last question here, would that put another 75 basis point or even 100 basis point hike at play? And yet again, he said he doesn't know. He has to look at data, yada, yada, yada. So the way the Fed is approaching things right now, it's kind of a month-by-month basis, right? They're not really relying on models. They're looking at the data coming in, all the time. And that's what they're looking at. So the markets are running right now. We have the S&P 500 up 1.6%. The Russell's up 1.6% as well. The Nasdaq's up 2.6%. We have the Dow up 1.1%. The VIX is now under 30. If I pull the VIX up, you guys can see we're now at 28 on the VIX, down 12% on the day. Silver is ripping like no other. Silver's up 4%. Gold's up 1.4%. Or actually, 4% up for silver. Gold's up 1.4%. Okay, so everything is moving up, but the crazy thing is, not to throw crypto under the bus, I think crypto is still very red on the day. Let me pull it up here on my Coinbase app. Let's see. Bitcoin's at 21.6 right now, down 3%. Ethereum's down 2.5%. So what do you guys think? Do you think the Fed is going to be able to fight inflation? The markets kind of believe the Fed right now, based on today's green day. Obviously, the markets are not completely gullible. They know that there could be more problems ahead, which is why I think there could be more downside in these markets and why I'm not excited at all for the rally we're seeing right now. This could easily be a dead cat bounce. So I'm going to wrap the video up there, guys. Make sure to hit the like button. Make sure to subscribe as well if you want to see my later video today. We're grinding out these videos today, guys. We're going to break down the markets more in depth later on. We'll talk more about certain stocks. So make sure to subscribe and join my Patreon if you want all my moves. You want to keep up to date with what I'm doing in the markets. You get exclusive morning videos, exclusive content. All of that is linked down below. You also get 5 stocks from Moomoo. Actually, no, 10 stocks now, guys. They upped the ante. 10 stocks from Moomoo, link down below. 6 stocks from Webull. All the details, again, down below. I appreciate you as always. I'll catch you in the next video, guys. Peace out.